Sagely investors, welcome back to the channel. My name is Kras and I hope that you guys have been doing very well. In this video guys, I'm going to tell you what a lazy portfolio is. I'm going to give you some examples of lazy portfolios, and finally, to wrap it up, I'm going to talk about why I truly believe that every single person should have their own lazy portfolio. So guys, a lazy portfolio doesn't mean that you're a lazy person, and by creating a lazy portfolio, it's definitely not going to make you lazy, and it's not going to give you the excuse to then go off and be lazy. All that the lazy portfolio is one that frees up your time and you don't need to do any research into the portfolio. It kind of just chugs along by itself. So there are 4 cardinal rules in my humble opinion, and of course these rules are all made up by me. So this information is not financial advice, and it should be taken as basic financial education and entertainment. So keep that in mind, guys. Now, the first rule behind a lazy portfolio is we want to keep it simple, guys. So my first rule is maximum of 4 holdings in the lazy portfolio, no more than 4, okay? Ideally 2 or 3 holdings in the portfolio. Rule number 2, guys, is no individual shares are allowed in the portfolio. Obviously, the lazy portfolio is all about being lazy and not spending any time doing research. Individual shares require lots of research, and that means that they are not allowed in the lazy portfolio. Rule number 3, guys, is you must select ETFs with the lowest fees possible for your lazy portfolio. You want to be lazy, but you also want to be smart. So you don't want to go into managed funds where you have to pay exorbitant fees. You want to be smarter than that, but you also want to be lazy. So go for the cheapest ETFs. Rule number 4 is very simple. You must hold on to the lazy portfolio for the long term. And what that means is don't just buy and invest in it, on day 0 and then not do anything with it. That would really make it a very, very lazy portfolio. You must keep working your butt off at your career, at your business, at your side hustles, so that you can keep adding to your lazy portfolio and growing it over time, over the long term. So guys, I'm going to give you some examples now of lazy portfolios, starting off with what I like to call the sagely Australian lazy portfolio, for lack of better terms. And it is basically 50% in VAS, which is Vanguard Australian shares, and 50% in VGS, Vanguard International shares. Now guys, this portfolio is very aggressive. There's no bonds in there, there's no gold. It is a pure play on international and local equity markets. So I wouldn't recommend for you guys to go out there and start emulating this portfolio, but it is one that I will be focusing on going forward. Another very popular portfolio, guys, is the Rick Ferry 2 fund portfolio. So 60% in equity and 40% in bonds. So you can choose something like 60% in VAS and 40% in Australian bonds, or you can do 60% in VGS, which is international shares, and 40% in VBND, which is international bonds. It's really up to you. So guys, now I'm going to talk about a 3-fund portfolio. In this example, I'm going to use 40% in stocks, which are local stocks, 20% in international stocks, and the remaining 40% will be in bonds. Another example is a 4-fund portfolio, which is probably the most complicated lazy portfolio you can get, which is equal parts, so 25% of the following: local stocks, international stocks, small cap local stocks, and bonds. So you can also do something like 25% local stocks, 25% gold, 25% international stocks, and 25% bonds. So the thing about these portfolios, guys, is that they can be mixed and matched to suit your particular situation wherever you are in life. So if you're, a very aggressive 20-year-old, you might elect to go with the sagely lazy portfolio. If you're 50 plus and you're about to retire in the next decade, you may elect to go for a more diversified 4-fund portfolio with gold thrown in there for that extra bit of stability. So it really comes down to you and what is right for you. Make sure that you speak to a qualified financial advisor before you jump into any of these portfolios. Now, why is it that I believe that every single person should have a lazy portfolio, no matter who they are and what they do? Yes, even traders should have a lazy portfolio. The reason being, guys, is that we need some sort of benchmark to which we can compare our other progress. So if you're an investor, let's say that you're a value investor and you like to focus on finding undervalued stocks, well, I think that a lazy portfolio definitely has something to add to your overall investment strategy and your overall investment education. So hear me out. If you spend 10 years, trying to invest and investing in undervalued stocks, and then you tally up that performance and compare it to the same performance that you received from your lazy portfolio. If the lazy portfolio has outdone all of your efforts and all of your struggles, and even if you do beat the lazy portfolio, let's say that you beat it by 1 or 2 percentage points, but you remember that you've put in thousands upon thousands of hours researching those stocks, well then you've won. You've essentially won because you've realized that you're wasting your time, and the effort to get that extra 1 to maybe 3% is really not worth it. So at that point, guys, you can just fall back on that lazy portfolio and make it your whole portfolio because it's returned pretty decent returns. Same thing if you're a trader and after 5 years of really struggling and really trying to make it as a trader, let's say that you don't. Well, at least you have something to show for it at the end of it, which will be your lazy portfolio. Let's say that you're really focused on your career. Well, you don't have a lot of time. If you don't have a lot of time, the lazy portfolio is perfect for you. Let's say that you're a business person, again, very, very short on time. You may have a family, you may have international business interests, and your time and your ability to invest in the markets the way you would like to invest is just not there. So again, the lazy portfolio is perfect for you. In all those situations, whatever may happen with your career, with your business, and with your financial situation outside of that portfolio, you still have that portfolio as a bit of a plan B, as a bit of a backstop. So I think in all those particular situations, it's something that's really valuable to have. Now, to kind of wrap it all up, I do really think that the lazy portfolio is perfect for a superannuation. So obviously, people with not a lot of money in their superannuation accounts, let's say they may have less than, $50,000 in their super. People like that should probably stick to a well-diversified investment scheme offered by their super fund. So for people that have more than, say, $100,000, $150,000, $200,000 in their super, they may elect to get out of that generic super fund and create their own lazy portfolio and just keep adding to it over the years. That could potentially be a very good idea for people who want to take a little bit more control over their super. So I hope that this video has given you guys some new ideas. Leave a comment down below about what you think about a lazy portfolio. Tell me what your ideal lazy portfolio will be, and I really appreciate you guys watching until the end. So catch you in the next video.